All right, ladies and gentlemen, welcome to our October 21st edition of This Week in Crypto. Believe it or not, we are on the cusp of hitting our last 2 months of the year here and what has been a volatile, uncomfortable, unpredictable crypto market of 2022. And there are, some positive signs, as we were starting to point out last week, in terms of what crypto markets were looking like. But as we see here, it's been a continued slide. Bitcoin and Ethereum had mild drawbacks, while altcoins had pretty massive ones. So if you have been heavily in altcoins, hoping for a turnaround with some big returns, the markets have not quite been ready as of yet. We will get into some of the altcoin highlights here in the early portion of the call, but as always, I want to point out that what we discuss here on our stream is not investment advice, and what we do go over is based on objective data, pointing out exactly what divergences look like and how they've compared to divergences of the past and what's happened in those situations compared to now. That said, when we look at some of the price returns here, we can see, Bitcoin and Ethereum both dropped about 4%. They had a huge drop just a couple hours ago and then quickly recovered. And during that time, we saw a huge ratio of profit versus loss spike in the negative direction, meaning a lot of people were trading while the price was down and essentially capitulating, giving up on their holding because they're tired of amounting to losses that they have. But as mentioned, the prices did quickly recover. Bitcoin is sitting here at just under 19K now, and Ethereum is at 1275 after being pretty consistently above 1300 over the past week. So this is a pretty recent slide, just in the last 12 hours or so. But we can see that the altcoins that were in much bigger pain, XRP finally came back to earth after flirting with 50 cents for the last couple of weeks. Cardano, another 12% loss. Solana, another 13% loss. We can see Ethereum Classic after its great run toward the end of the summer. They've been continuing to retrace now. Terra Classic dropping back down. ApeCoin dropping big. Axie Infinity was the biggest loser of the top 100 market cap assets. And Ethereum POW was also a big loser. That said, social volume has been kind of a mixed bag. We can see Bitcoin discussions were just a little bit further down over the last week, while Ethereum had a bit of an uptick. Stable coins, big uptick in USDT and USDC discussion, at least certain types of USDC. It's kind of interesting here. Other USDCs are down, so that's kind of a wash. BUSD up a little bit. Dogecoin had some significant talk after it had very brief signs of decoupling, kind of in the middle part of the week. And Matic also had a bit of a mild climb. Cardano, mild climb as well. But we can see pretty clearly that prices are continuing to cause pain. And when there's pain, there's opportunity, of course. And it's easy for anyone to say anytime markets are down, an opportunity is presenting itself. But we actually have metrics that are backing that claim. And we will jump into it here, beginning with what I mentioned, the ratio of on-chain transaction volume and profit to loss for Bitcoin and Ethereum. Check out what's going on just in the couple of days of data we have so far this week. We see here, Bitcoin is in blue, and it's showing that at a mark of about negative 0.24, this means that there is a little more, there's like a 4-to-3 ratio of loss transactions versus profit transactions right now. And that's significant because when you see major negative signs like here and here, that generally is the stoppage of downside. And there has been some minor downside, as we showed with Bitcoin and Ethereum, both down 4% over the past week, but nothing significant compared to this one we saw, And this one we saw, and even this one where there was a little more of a slide that had been going on. And usually what happens after we see these negative spikes is a little bit of a climb right after. And right here too, the bleeding stopped. We actually had a little bit of a climb and it was mostly flat. And right here too, we saw eventually a climb over the next couple of weeks. Not saying that's exactly what will happen, but history has shown with previous negative spikes like this, generally there is a bit of a rebound as opportunists scoop up the Bitcoin and Ethereum that traders are selling. So I mentioned how Bitcoin is at like a 4-to-3 ratio. Ethereum is actually way down here at a 3-to-1 ratio. There's a ton of people that are dropping their Ethereum right now and trading them at a price lower than the price that they received those Ethereum at. And as we can see, this right now, if it were to hold, and that's a big if, it would be the lowest negative ratio, not just in the past year, but if we go back to 2015, it's arguably going to be the biggest ever. You know, I'd have to zoom in because this is very non-granular right here. So there might be some other negative ratios that are very close to it. But regardless, this is historically low just through the first couple of days of the rolling week between Thursday and Thursday. And that said, it's going to be worth keeping an eye on if there's a bit of a rebound here with so much bleeding going on and weak hands that are giving up on Ethereum at the moment. And it's easy to feel like the merge was ages ago, but it's only been 5 weeks. And over these past 5 weeks, we've seen a very brief spike right after the merge, followed by a long-term slide. And this long-term slide is a concern for people because this is essentially the image that proof of stake has in people's minds thus far. And people think that because prices have dropped something like 20% or so since the merge, that must mean that this is somehow a failure or this is the new normal for Ethereum. We don't think that'll be the case. Many people do. You can, of course, do your own research and make your own assessments, but this kind of spike, both on the 14th, this was when the first drop happened after the merge, and this more recent spike happening this week. These are signs that there's some serious capitulation. And generally, if you're playing the odds, price bounces happen at least temporarily after any of those big negative spikes happen. So that's worth keeping an eye on. And just to go over a couple other big stories of the week, we saw some anomalies for Litecoin, which we don't talk about too often. It's been somewhat of a quote unquote boring asset here in 2022. But you can see that it has climbed against the price of Bitcoin, especially since mid-June. The price was sitting at something like, at a bottom, it was at like 0.0017, and it got up to about 0.0030 as of about a month and a half ago before it's starting to retrace against Bitcoin again. But you can see there is a huge whale transaction spike back here on the 13th. That marked a top. And the way you can kind of identify whether these volatility indicators are going to predict a upside or downside, you just have to look at what direction prices are moving at the time that the spikes occur. And this happened right after a big price rebound and a bunch of whale transactions suddenly took place. Keep in mind, these are whale transactions of $1 million or more, not the usual $100,000 or more. These are really, really big transactions going on. And right after that, you saw prices fall. Things started to normalize. A little bit of a daily active address spike here, and then an enormous one here. These were the highest spikes of address activity of 2022, and it coincided with the highest whale transaction spikes of 2022. And when that happens, we again look at what direction price has been going, which was down. And when you have prices going down and suddenly a bunch of volatility indicators, that generally is a good sign. And it's arguable whether it's been significant thus far, maybe a very small rise, but keep an eye on Litecoin over the next week or two and see what impact these big spikes will have, because they're pretty big anomalies. And we can zoom out, as I said, going back to the last year, The last time we had a daily active address spike, technically 11 months ago. So excuse my French on saying it was a full year. And then whale transactions, it definitely was the biggest spike of 2022 and the last year. So we want to keep a close eye on Litecoin. It historically has been a leading coin for Bitcoin in the markets at times. And if you see Litecoin have any sort of breakout, especially positive decoupling for like a few days, Bitcoin has a tendency to follow upward and drag the markets with it. So that could be a very good sign, just something to think about. Certainly no guarantee that that'll be the case, but whenever a Litecoin anomaly like this pops up, we want to keep a close eye on it. Another big story of the week, we just saw this yesterday, but take a look at Chainlink's whales. We're looking at the 10,000 all the way up to 1 million coin addresses. So this is coins that hold anywhere between 65-ish thousand all the way up to $6.5 million. And right now, we've seen a 7-month stretch of accumulation where they've gone from holding about 12.6% of the supply to holding about 17.6% of the supply. A 5% swing in the supply of an asset going to whales and sharks. That's a promising sign. It means that the people with a lot at stake are betting on prices rebounding at some point. Doesn't mean they will anytime soon, but it certainly doesn't mean that people with the keys to Chainlink's price are optimistic about prices returning to where they used to be back when they were exceeding, I think, $40 to $45 back in August and September of 2020. So this is the kind of thing you want to see when it comes to an asset and the kind of whale activity that could sort of foreshadow some upside here. And with such a sustained period of accumulation, it's definitely worth checking out and keeping close tabs on if you're on Sandbase Pro right now. I actually noted how much Chainlink was being accumulated. So they collectively added about 4.73% more of Link's existing supply since March 3rd. A total of 47.31 million Link, and that translates to $312.7 million. So that's no joke. And like I said, this is a pretty big anomaly. Not all coins are looking like this at all. A lot of coins are flat, or their whales have even been dumping. So this is one that's been standing out for a while. And I know there are a lot of Chainlink fans out there who will be happy to see this kind of statistic. Now on to our social trends page. I wanted to point out that our team did some great updates. If you had the previous social trends page bookmarked, note that the URL did change, and you may want to write this one down, app.santiment.net/dashboard/social-tool, #SoakTool top 10. You should be able to find it just by going to our left tab over here. And also notice this is a really cool new feature. It shows the social dominance of our top 10 keywords that are showing a rise or a percentage increase in the mentions on crypto social media in the previous 24 hours. And it's combining the dominance of discussions from these keywords compared to all keywords on social media to show just how much weight they currently have. And you can see right here too, it'll tell you how much social volume it's having over a 7-day period and what the social dominance percentage looks like right now. So we can see things like avatar, NFT, they've been getting an increased amount of interest as of late. Not really any key assets at the moment, but we have seen several over the past week that have popped up on here. When they do, remember that the likely scenario is for a coin to retrace after hitting especially a top 3 position on our top 10 trending words list, because usually keyword assets pop up because they're pumping in some way. Not always the case, but if they are, they tend to retrace by an average of about 12% over the next 2 weeks. So beware if you see one of your favorite assets that's pumping suddenly up here on the top of our trend list. That usually means the mainstream has latched onto it and they are beginning to FOMO in. And when FOMO starts happening, tops start happening. And as for specifics related to what's been happening on social trends that might be topical to our current market landscape, take a look at the bullish terms versus the bearish terms, and you'll see that there have been several spikes of positivity, like we saw back here on the 12th, that eventually led to a big drop. Same here, right as the markets were dropping, you saw some positivity. Markets kept dropping as a result. On the other end of the spectrum, when you typically see like an actual negative spike, when people are becoming a little bearish, that ends the slides in many cases, or it even propels prices upwards. Like we see here, prices moved up. Like we saw here, prices moved up. Here, it at least stopped the bleeding. And that's something to keep an eye on too. Even back here, you can see that it rose right after. As we've said many times on these calls, markets typically move in the direction of the crowd's least expected direction. So when they get a little euphoric, as it's reflected here, prices are more likely to move down, vice versa when they get very, very skeptical. All right, let me check chat really quick. We're at about the 20-minute mark right now. And thank you to those who are in the chat right now. Appreciate you being here with us. Okay. So moving on now, let's take a look at what's been going on with the supply of Bitcoin over the past few weeks. We can see there have been some major outflows throughout the last 6 months, actually, going back to mid-May, where right after the big drop, you saw a bunch of coins move off, and then prices actually were able to rise a little bit. Same here, a bunch of outflows right after the huge drop. Yes, there was one more big drop afterwards in price, but eventually prices moved up. Here, we saw an outflow, and then price temporarily moved up. It still appears to be slightly in an upward trend right now, so that's a good sign. And then the latest outflow right here, this was the biggest difference between outflow and inflow here on the 18th since going all the way back to June 17th. So about a 4-month exchange outflow high right here that definitely could have an impact on the upcoming week or two. If we're playing the odds, as I just showed, prices do tend to recover a little better after we see these big outflow spikes. There's certainly no guarantee that'll happen, but we haven't really seen any inflow spikes since going back to around the 12th or 13th here of September. So without any inflow spikes of late, we can see what's been going on with the supply and exchanges. Just about 5 months ago, we were sitting at a supply and exchange number of 10.46, and it's just gradually moved down and down and down. This was a big drop right here, as we saw from the outflow. And we're down to 8.48%. So just in the past 5 months, we've seen another 2% of Bitcoin moving off of exchanges, and close to about 20% of the existing coins on exchanges moved off. And that is massive. And if we zoom out here, we have to go even further back. I think it was 2018 the last time we saw something that low. Yeah, after this big, huge inflow of supply onto exchanges. We have to go back to November of 2018, though, just about 4 years ago, the last time we saw anything close to where we're at now. And sub 10% Bitcoin on exchanges is generally a good thing. It means that in general, there's going to be less risk of a future sell-off occurring. And with less risk, means you can have a little more confidence that if you add to your position, there can at least be some limitation on further downside happening based on odds, of course. So that's something to keep in mind. Why don't we move now into some of the main Bitcoin and Ethereum metrics. I'm going to open up my main template here. And let's see what we can find. So trading volume and transaction volume, pretty much everything is down. This isn't necessarily a bad thing by any means. Generally, if you're a TA trader, you probably already know, but when you see volume rising into a certain trend, it means there's more likely to be a continuation of that trend. If you see volume shrinking into a trend, that means traders are disinterested in the current direction of the price, and the opposite price movement is soon to occur in most cases. So right now, traders are disinterested in what has been kind of a flat market. It's difficult to really tell where things will go next. If we make it a little more granular, and let's go like, let's go 1 hour for all three of these. We'll just take off this because it's a daily one. So you can see that it kind of dropped down. See how price went down here and trading volume was going down with it? This means traders were not interested in interacting with Bitcoin as the prices were sliding. But then once prices started to rise, trading volume rose with it, showing that there was a little more interest in prices rising versus prices falling. And then, of course, prices fell again and trading volume went down. Now it's actually picking back up, and we're going to have to see how price reacts to it. But in a flat price market, kind of like we've seen at least over the last 6 days, the first of the last 7 days was when the big drop happened. It's tough to predict what volume can do. But if you start to see prices continue to rebound after this morning, for me, many view it's afternoon or evening, after there was an initial drop, and then a big rise. Let's see how markets now react now that prices are at least in rebound mode a little bit after what was like a 1.5–2% Bitcoin drop in the span of just an hour a couple hours ago. All right, going back to the 6-month view, circulation and daily active addresses, they appear to be about even right now, fairly flat, nothing too much to say here on the active address end. Circulation is still kind of low. It's sliding, and actually on the 30-day moving average, we're at a 6-month low. So that should translate to our NVT chart, which it does here. We're on our 3rd straight month here, folks, of a bearish signal with no signs of it really being anywhere close to these trend lines. As long as the NVT, the amount of circulation versus the market cap, continues to stay so high, that's going to continue to point to a glaring lack of unique tokens moving around on the network. And we have to be a bit concerned about that. Until that changes, we can see what's happened in previous stretches where there's been red, and prices have just slid along with it. Back here in 2018, back here in 2019 to early 2020. This one actually had a small rise. This one, you could see it marked the top as soon as we saw that first month of red. And it did stay very volatile, but there wasn't enough circulation. So as we see in hindsight, the October and November all-time highs, they were kind of inorganic. And even once things got bullish, there was just so much deficit that was caused here that prices went down. This was kind of one of the biggest anomaly that we've seen on the NVT chart. But in general, when you see orange and red, prices do go down. So we do want to see that utility can start to turn around. And sometimes that can happen just from, something simple like some whale accumulation, and that can spark a domino of a lot of new traders coming back in, or people returning now that markets are looking better, and then we suddenly have a green bar again. So if we look at something like whales, If I can find where I'm going, let's move this over here. All right. So skipping down to whales, and I'll come back to the other metrics here in a moment. Let's just take a look at 100 to 1,000 and 1,000 to 10,000 coin addresses right now. And we'll overlay price on here. All right. So this is the last 6 months of whale activity. We can see that the 100 to 1,000 addresses, they actually showed some pretty nice accumulation from June all the way up until about a month ago. And as of a month ago, they started dropping the amount of holders of this tier. Meanwhile, the amount of 1,000 to 10,000 coin addresses have stayed quite low, maybe just a very slight encouraging uptick over the last month, but you can tell how much this category has continued to drop over the last 6 months. And overall, it isn't very promising that there are less and less whales. If we merge them right here, we can prove that compared to when it peaked up here in mid-May, yeah, we've dropped, if I hold down shift, dropped about 171 addresses that hold between 100 to 10,000. So they're not really making any big moves right now. And just to show another angle, 100 to 1,000 in terms of supply held. Yeah, so it's even less promising when you look at the percentage of supply held. This orange line here in the middle shows the combined holdings. So they were holding about 48.2% on May 1st, and they're down to 45.6% here on October 20th. So, you know, give or take 5.5 months, we've seen another, what is that, about 48.1, 48.2. So it's another 2.6% of the Bitcoin supply that's no longer held by the key whale addresses that really propel markets upwards and downwards more than any other tier. So that's something to keep in mind. And until they start to kick things into gear, we may continue to see that low circulation and those red bars on our NVT model here. All right, now looking at MVRV, it's pretty much been flat over the past week or so. Not much has changed in terms of average trading returns. They're right around even. Right now, there's just a slight discount with 30-day traders averaging returns of around negative 2.3%. The 365-day traders, though, they're down an average of 39.4%. Indicating that in the long term, there's still plenty of meat on the bone for prices to be able to rise and get that long-term MVRV back up to zero, even with the mid-short-term MVRV looking pretty much flat right now. And that's how a lot of these assets look right now, by the way. We'll take a look at Ethereum here momentarily. Before we do that, though, let's look at the funding rate and see what's going on there. We saw some interesting shorting going on as of late, and there's still some shorting as of right now. So this is the long-term 8-hour funding rate where we're looking at Binance, BitMEX, DYDX, and Deribit. And then this is just FTX and DYDX because they have 1-hour funding rate. And we're back to seeing some pretty decent sized shorting for Bitcoin. And whenever there's shorting, there's a higher likelihood of a rise. Whenever there's a lot of longing, there's a higher likelihood of a fall. Prove that. Look at the last 6 months here. Check out when they get really high, like right here. They sort of foreshadow these drops. And then once it drops, you can see everyone's shorting, trying to ride the wave down. They expect Bitcoin to fall further. You know, maybe some of them actually stayed in and got out right around here. Most did not, though, and prices rose right back up. You can see right here, big long funding rate right here, right at the top before a big fall. Once there was a big fall, you can see the big shorting spike happened right here, and then the fall stopped. And then rinse and repeat. A lot of longing right here, price falls. A lot of shorting right around here, price starts to rise again. And so right now we're a little closer to a short fest than a long fest. And that lends to the argument that prices have a better chance of rising than falling until the fear or the greediness of people betting against the markets goes away. Whale transactions, not too much to say. They're continuing to kind of fall. That makes sense with what we just looked at with the supply distribution. Not a lot of engagement at all. And the 100 to 10,000 coin addresses are just gradually kind of sliding, if not staying pretty flat right now. We touched on the ratio of on-chain transaction volume and profit to loss already, continuing to look pretty decent right now because both Bitcoin and Ethereum are in negative territory. Mean dollar invested age, not much to say. The amount of dormant coins sitting in wallets are continuing to grow cobwebs and not show a lot of movement. Network realized profit loss. Over the past week, we did see a few minor spikes. We saw this one here indicating that there was a lot of losses starting to amount. And there was a slight rise right after. Then there was this big profit realized spike. This was actually the largest realized profit spike since July 20th. So 3-month high spike right here led to a very small local top. I would call these more short-term indicators, and they don't really have too much of a big impact unless you see something like this happening, which could actually lead to multiple weeks of gains if it's negative, or multiple weeks of losses if it's positive. We touched on exchange flow balance and supply and exchanges. Now, social volume and dominance, this is a big one. We've talked about it pretty consistently on most of our shows. In case you're not familiar, we like to see that Bitcoin's social dominance is sitting at around 20% or more. And yeah, that's not what's happening right now. We've been well below 20% for the vast majority of the last 2.5 months or so, going back to early August. And with social dominance being so low, there's still too much focus on altcoins, opportunities that don't really have much organic long-term upside for the crypto sphere. And it's a lot of people continuing to chase pumps from small altcoins that they might be hearing something about from a pump group, or riding the wave after seeing something go up 10%, hoping it goes up to 20%, something like that. And we made a post about it that really highlighted the impact of this dominance. I wanted to show that really quick. So check this out, guys. This was posted just a couple days ago. I wanted to highlight how when social dominance, which is marked here in blue, is high, well above the 20% line that I've outlined here, that's when you see prices tend to rise. When it starts to go below 20%, look at that, price fell. Then it started to go above 20% here in the middle of the month. And this was interesting. Yes, we had this big drop off just as Bitcoin was starting to be discussed a lot again after a big FOMC report where they put up another 75 BPS into interest rates. But eventually, look at what happened. Bitcoin's social dominance mainly stayed above 20%, and prices really pumped quite rapidly, got back well above. This was almost to it. Hold on, I'm sorry, I'm looking at the wrong year. I apologize, folks. So this drop was actually something that happened in 2021 that I do not remember the reason for. But regardless, you can see the social dominance was up high, and prices ended up pumping to a then all-time high ended up going negative again in late 2021. There was one more small leg up before Bitcoin just got absolutely punished along with the rest of the crypto markets while social dominance was well into this red zone. And then when it finally got into the green zone again here of this year, this was actually the FOMC drop here that I was referring to. That's when you started to see prices able to rise again. And then beginning in early August, social dominance fell back below 20%. Prices dropped. So yeah, I think there's a lot of validity to this metric, and you probably should too. If you believe in infographics like this, keep in mind this is a 2-year infographic. So if you're trying to swing trade based on a day-to-day or week-to-week strategy, social dominance may not be very helpful. But again, going back to our Bitcoin chart, seeing that Bitcoin's social dominance has been down since it looks like right around here, early August. Yeah, we're definitely in a red zone where it made sense that prices have been dropping back down again. And until that changes, we need to be a little bit weary, even with the positive signs of MVRV looking pretty good and a few other things that we can go over. Weighted sentiment is one of those other positive signs. We can see that negative sentiment has prevailed for the vast majority of the past 6 months. Again, this is a long-term signal, not a short-term one. We're looking at weekly, not daily candles right here. And outside of a few anomalies here and here, it's been pretty much the same negative narrative in Bitcoin. People are not believing it can go up. There's concerns about its close ties to equities markets right now and inflation and too many retail traders. Institutions have kind of dropped out as well, so there's less to keep prices propped up. And I've seen all sorts of narratives like this making the rounds. And eventually, I can assure you, based on history, that if negativity prevails through the end of the year, there will be some serious price upswings to punish people for continuing to FUD against Bitcoin the way they have for quite a while now. Long term, you can see when the major positive spikes happen, that's when price tops form. The major negative spikes, these lead to price rises. And we've seen plenty of negativity here throughout the past year. Quick check on chat here. I'll try to get to a few of Danny's questions here toward the end, if those were questions. All right, and of course, development activity looks fine for Bitcoin. It stays pretty mid-level in terms of development among the top 100 assets. Let's take a look actually at a few of the development activity leaders here over the last 30 days. I went back to the screener here. I'm going to click on development activity over the past 30 days. And we can see that Polkadot and Kusama, who share the same GitHub repository, they remain at number 1 and 2. They have been here for a couple of weeks now. Tons and tons of notable development activity. And until that changes, I think that there's some upside to checking out Polkadot and Kusama. Of course, we don't just look at all GitHub posts. We take out things like daily Slack messages and things that aren't related to the actual advancement of a crypto asset. So these are legitimate innovations and improvements to the asset that are going on Polkadot and Kusama. You can also see Cardano here, which was formerly at number 1 for most of the past year. They're at number 3 still with a 480-ish GitHub submissions happening on a daily basis. Status down here as the 261st market cap asset, it's still getting a ton of development activity. Decentraland has recently jumped into the top 5. They've been in and out of the top 10 for the last couple of years, but it's very cool to see that the VR NFT-based, metaverse-based asset is cracking into the top 5 right now with over 300 submissions per day. Filecoin, Vega, Atom, Ethereum, and Internet Computer round out the top 10 here. All right, now let's take a look at Ethereum really quick, and then we'll start going into some questions. And feel free to drop your asset requests in the chat for Balresh, and he will be sure to let me know which ones we can check out. All right, so volume on Ethereum, you can see what the story is. There has been less and less trading volume on Ethereum as time has progressed here over the past 3 months in particular. We saw a big spike here in trading volume and on-chain transaction volume, but that did not amount to much. This was, of course, right around the merge, so you can understand exactly why. And we saw the very small uptick after it happened, followed by a lot more downside. And it's basically fluctuated in this 1250 to 1350 range ever since, for going on about almost 4 weeks now. Daily active addresses in circulation, not much to say here. It's especially surprising to see circulation down as low as it is right now. Circulation, if we go to NVT for Ethereum, so you can see how tall this red spike is. The lower the better, because this is a ratio where the lower it is, the more token circulation there is versus market cap. You can see what happens when they're in a green stretch, and then it starts to get very volatile when you get into orange and red territory. And now it's kind of fluctuated here between green and red, very interestingly, over the past 6 months or so, or 8 months, I should say. While it's here in red, just be wary of the fact that Ethereum does follow this chart pretty closely. And while it's in red territory, prices do tend to drop. And as we can see on this chart, yeah, ever since the merge here, circulation here in red has continued to fall off. So it makes sense, and we need to be concerned about that. MVRV, pretty much in a similar spot to Bitcoin, perhaps a slightly better opportunity. It's sitting at about negative 2.8% on the 30-day, and then on the 365-day, it's at negative 43%. The last time it was really at this level, and it's been at this level for about a month now, but you can see what happened here from mid-June to mid-July, where prices basically bottomed out as MVRVs got to negative 58, even below negative 60% at one point, and then rebounded nicely until the 365-day MVRV got to around negative 23, negative 24%. So yeah, we're in a better than average territory still in terms of average trading losses, amounting to some pretty high numbers right now. Taking a look at funding rate really quick, nothing too crazy on Ethereum. We saw a bunch of anomalies happening around the merge, but that's quieted down and it's more or less even right now. There's not as much shorting on Ethereum as there is for Bitcoin right now. Whale transactions, not much to say, continuing to fall down, even more than Bitcoin is right now. And now let's take a look at whales. Specifically, I like to look at the 100. So we're going to look at the 100 to 1 million coin addresses and what they're doing. And right now, it's been a pretty big slide. You can see the merge happened actually right here. And I'm going to overlay the price of Ethereum compared to Bitcoin, not just price USD, but price of Ethereum versus BTC. Put that in bar form. Zoom out, go to the last couple of years. So generally, when you see this tier start to slide, the price of Ethereum versus Bitcoin slides along with it. And it's been a little more prominent here just in the last 3 months. We'll even go 6 months. So look at how they slid from April down to June and how the price of Ethereum dropped along with it. Started to flatten out a little bit here. And then other than this little anomaly right here, you can see that this was the big accumulation stretch where the 100 to 1 million coin addresses were really starting to accumulate before the merge happened right around here. And look at what happened with Ethereum's price versus Bitcoin. It was exploding. And then just at the same time, look at how the whales really started to drop off from that first week of September until now, and how that marked basically the top of Ethereum versus Bitcoin. So yeah, I think this group of 4 different tiers has a lot of alpha to it in terms of how Ethereum is looking versus Bitcoin. And of course, a lot is going to be dependent on how healthy Bitcoin continues to be these final couple of months of 2022. But in general, if you're trading altcoins or Ethereum, whether you deem it an altcoin or not, take a look at how some of the altcoin tiers measure up against the price of Bitcoin, not just price of USD, but if you're looking against the price of Bitcoin, that's going to actually dictate when accumulation from those key whales is going to lead to a decoupling from your favorite asset. They can lead to a big pump or a dump. All right. We are at about 48 minutes past the hour. I think, actually, let me do just a few more Ethereum metrics while I'm here. Nothing on the mean dollar invested age side. Network realized profit loss, very small loss spike here, nothing special or out of a crazy range. Supply and exchanges has been moving down. Take a look at the crazy exchange flow balance, though, that happened just in the last week. We had a big anomaly where there was a ton of outflows and then a ton of inflows right afterwards. This could have been some exchange address shuffling of some type. It didn't really amount to much in terms of prices because it was such a quick turnaround between outflow and inflow. Sometimes this might cause a little bit of price volatility, but I haven't seen anything to be too excited about there. But regardless, it's good to see that the supply and exchanges in general is starting to move back down again after a ton was moved to exchanges right before the merge. So we were at about 15.82%. Now we're down to 14.38. So about 1.5% of Ethereum supply has moved off of exchanges once again. And like we've said, the more that is moved off exchanges, the better chance the coin has to hold or grow in price because there's less risk of a sell-off. Social dominance, just like Bitcoin, is very low for Ethereum right now. Obviously, this was the big merge spike, and then some other discussions that happened in July and August. But right now, Ethereum tends to be pretty ignored, just like Bitcoin. So both of the top 2 assets are kind of being overlooked as traders are seeking those few pump opportunities out there. Weighted sentiment also remains just mildly negative, and it's been that way for quite a while, going back to May. Development activity overall looks pretty normal. As we said, I think it was in the 6th or 7th spot on the top 10 countdown for daily activity, development activity. If we go all time, though, you can clearly see that the overall trend is more and more development over time for Ethereum, and that is what you want to see in assets that you're holding for the long term. So there you go. There's a little update on Ethereum on top of Bitcoin, and I think now would be a great time to take a few asset requests, and I'm going to take a few sips of my lovely Diet Coke. Mm-hmm. Yeah, let's take a look at Curve first. I know we've done a lot of Cardano the last few weeks, but Curve we haven't touched on in a while. All right, so what's happening with Curve? Seeing a few interesting things right off the bat here. The transaction volume is starting to grow a bit again. Maybe not too outside the realm of norm. We saw that it really bottomed out here in early October a couple weeks ago, and now we're starting to see a little more transaction volume, and trading volume is still staying very low. So it's kind of a mixed bag here. I would not put too much into it. Maybe keep an eye on if transaction volume starts to grow similar to what happened here in mid-June to early July. This is when it really marked a bottom and prices were able to rise again. Curve, of course, I think it was somewhere around here in like late July, early August. Someone can correct me. That's when they had their big hack, and their main DNS address had like found a way to reroute people's withdrawals into a fake account where people were stealing coins. But that was more or less resolved. Everyone seems to be past that issue, and Curve is functioning as usual. Probably lost a decent amount of trust from that, but it's still sitting at about 88.6 cents, which is what a lot of altcoins have been doing, just slowly bleeding over the course of October. Daily active addresses in circulation. Pretty much a continued slide down on the daily active address side, 485 on the current day. The last full day we saw 819. Yeah, I mean, you can tell from the orange trend line here, it's definitely continuing to move down, not quite to the level that we saw in late June, but it is a concern that there's not a lot of utility. Circulation pretty much flat, nothing too exciting here to talk about. MVRV, let's take a look here. So just like Ethereum, the 30-day MVRV is sitting at around negative 2.5%. The negative 365-day MVRV is very negative, much more so than Bitcoin and Ethereum. Average trading returns are at about negative 55%. That is very, very low. If we go back historically, 2019, let's make the axis a lot bigger. 1 and -1. We'll even do 2 here. Wow, there were some huge MVRVs back in 2021 for a Curve. My goodness. Well, we'll leave it there. So at the highest, wow, the 365-day ratio back in early February was way up at 872%. It was a fairly new asset though. So as time goes on, it becomes more and more normalized. But you can see as far as negative percentages, the lowest it got was here in mid-June at about negative 75%, and prices bottomed out right there and then proceeded to gain 138% after it got that low. And 365-day MVRV continues to be very low right now. And as long as it is, there's a much better chance of another rebound like this than another slide like that. That's for sure. So keep that in mind. I'd say that's a very good sign, especially if you can see the 30-day MVRV start to get below like negative 10, negative 15%. That would be a very good sign that a bottom is forming for Curve when the short, mid, and long-term average traders are all down. Zoom back into the last week, see if there's anything going on with the funding rate. There have been a pretty significant amount of short fire-offs here, where every time, not every time, but a lot of times where people start to short, that marks the bottom and then it continues to rise. Look at all the shorts that were happening around here. This was at the beginning of the week. And these were all basically attempts at riding the price further down, but the price just didn't go further down. And eventually there were a ton of liquidations that happened around here. If we mark the bottom on the 16th and go up to the 17th, prices jumped about 12% there. And a lot of these shorts that were sitting were in a lot of pain when that happened. So yeah, Curve is definitely an example of an asset that has prices move the opposite direction of crowd expectation. Moving back to the 6-month view, whale transactions have been pretty shy. Slight uptick here. This was just today, we're seeing the most $1 million plus whale transactions. So the same amount as October 3rd. Before that, the last time we saw was about a month ago. So maybe a little something to keep an eye on here. Considering prices are flat, this is more likely to be a sign of accumulation. But let's look below and see exactly how likely that is. So Curve is at about 88, 89 cents right now. Let me layer on price of Curve versus Bitcoin. And we'll just look at the 10,000 to 100,000, 100,000 to a million, and 1 million to 10 million coin addresses. I don't know why my price of Bitcoin just went away. Let me bring that back. So let's take a look. So the 10,000 to 100,000 coin addresses, they've been continuing to climb. They don't own a big part of Curve, though. They own less than a percentage. 100,000 has been dropping, and 1 million has been pretty flat. Let's go ahead and combine them for a little bit of easier analysis. We'll take all these off. Okay, so overall, the trend is up over the last 6 months. The 10,000 to 10 million coin Curve addresses do own more than they did 6 months ago. It's been up and down over the past month here. Let's go back all the way to the beginning. Okay, so yeah, this tier has grown and grown and grown over time. I'd call this a pretty good sign, to be honest. This is, you know, coins, addresses that have anywhere between like $9,000 up to about $900,000. So this is, hold on, 9,000, all the way up to $9 million, excuse me. So that said, this is a pretty good sample size of 2 years where they've just continued to grow and grow and grow. And the smaller traders are likely giving up a lot of their coins, their Curve coins, to the larger ones. And we can take a look at the 1,000 to 10,000, 100 to 1,000. Yeah, so beginning with 10 to 100, they're starting to flatten out. 1 to 10 starting to flatten out. The really tiny ones are still growing. That's pretty normal. You can see that, yeah, the 10 million, this is the one where they're sort of feeding the founder addresses into the smaller ones. But I still like the fact that the 10,000 to 10 million coin addresses are growing over time. And until that changes, until we start to see them move down, it doesn't look like Curve is going anywhere. Ratio of profit to loss looks pretty normal. Dormant coins, slight tick down here, slight tick down there, but we'd need to see a lot more to start getting excited that some dormant Curve tokens are moving. Interesting that we're seeing a big exchange flow balance outflow right now. This would be a good sign more often than not, because we're seeing a ton of coins moving off of exchanges right now. And this was the highest as of today. This is like in real time. 4.73 million and more coins are moving off of exchanges than they are on. And this is the largest outflow spike since July 1st. So 3.5-month high right here in terms of outflow. And then in terms of the supply on exchanges, it won't update until the end of the day, but this outflow will probably send the supply on exchanges down to close to, I don't know, 5.5%. And that's a pretty good sign. There's a relatively low amount of curve tokens that sit on exchanges right now. Social volume and dominance, dormant at the moment. Weighted sentiment, pretty flat at the moment. And development activity curve doesn't have a lot. Some of you may know that Andre has left the project as of a few months ago, but I do believe there's still a team that monitors and ensures that the platform is working as intended. So there's curve. Why don't we do one more? You mentioned Cardano, and what was the other one, Balrush? All right, so Balancer just had a big transaction volume and trading volume spike. It looks like this was the largest transaction volume spike for Balancer of the past 6 months. Well, when we go to a different view, that's no longer the case. Okay, so this is now daily. So this was the second largest transaction volume spike of the last year. That is significant. And the last time we saw the other two huge transaction volume spikes both resulted in local tops, as you can see here and you can see right here. So odds are that this was a top and prices are more likely to retrace, but anything can happen, and we'll look at some of the other metrics and see how they match up. Daily active addresses in circulation, we can see a similar spike that occurred here at the local top. I guess this price run up over from the 12th to the 19th, yeah, that was about 28% or so. So definitely a huge jump in price there, and that's probably caught the attention of the user who requested it and some other traders. But yeah, this was the 4th largest circulation spike over the past year. Looks like around the 5th or 6th largest daily active address spike. So yeah, there's definitely some activity moving right now. MVRV is actually positive for the 30-day, unlike Bitcoin, Ethereum, and Curve. The average traders are up 5% or so, and the average long-term traders, 365-day, are down 30.5%, which is still down a lot, but not as much as Bitcoin, Ethereum, or Curve. We don't have funding rate data on Balancer. That means the exchanges just don't offer them, at least the ones that we have funding rate data on. Whale transaction count, we did see a spike here. So people did get active when they saw this potential local top forming. This would indicate further that there could be a little bit more retracement happening. Lots of volatility indicators pointing to the 18th being a local top. Price is currently sitting at $6.04. So we'll take a look at, let's take a look at 10,000, 100,000, 1 million. Okay, yeah, they hold a very large percentage of the supply. So we'll put these all together. Wow. Yeah, so interesting here. The vast majority of Balancer was held by what looked like 1 million to 10 million coin addresses until mid-May. And then they actually started holding even more. Now a lot of those are holding 10 million coins plus. And as of now, the 10 million plus coin addresses are holding the most that they have, at least throughout over the past year. Meanwhile, And it's almost misleading to have the 1 million to 10 million tier here in because it's so dwarfed. Let's take a look at this one more time. All right, so I'm just going to exclude the 1 million plus addresses for a minute and focus on 10 million up to 10,000 up to 1 million. And they are shrinking at the moment. This is interesting. So these are like the $60,000 all the way up to $6 million addresses for Balancer. And they've been shrinking pretty significantly in terms of their supply held. But it's misleading because the 10 million plus coin addresses are rising so much. And I actually haven't seen a pattern like this before. So thank you to the person who requested it. Go back to the beginning of Balancer. I didn't know Balancer actually existed for this long. Okay, so it started about in the summer of 2020. So 10,000 to 1 million coin addresses, they do seem to have a little bit of alpha on price. I'm concerned about this, considering they're holding so much less than they have historically. And even though the 10 million plus addresses are getting richer, it's funny to see this because you don't know if they're founders' addresses, exchange addresses. I'm curious on the number of addresses too. Why don't we take a look at these right here? We'll just go to the last year. So the number, there's only one 10 million plus coin Balancer address, and it holds 43.88% of the supply. That could mean anything. It's very tough to say whether that's a good thing or bad thing. I would presume it's a founder's address, but not necessarily. Maybe there's just one exchange address or one very savvy investor who believes very wholeheartedly in Balancer. But overall, like the 10,000 to 100,000 coin addresses, they are moving up again. They're sitting at about 126 at this time. 100,000 to 1 million are moving down. It's kind of a mixed bag. So it's very interesting, and perhaps our team can look into exactly what this one address is and see over time whether there's some correlation with price in some way. I'm curious just by going to top transactions table here. We'll just put it at the bottom. Let's see if there were any significant moves over the past couple of months. So the largest transactions just happened yesterday, where there was 644,178 coins moved. It looks like from a centralized and decentralized exchange trader to a new address. Then the new address moved to this address, which is existent. I wonder if it's something DeFi related or what. They currently hold $509 million. So this has to be the one address that has over 10 million Balancer in it. And we can't overlay price on this particular chart, but I'd like to see, let's see, this is just the past week. Let's go to the last year. Okay, all right, now it's making more sense. So over the last year, this address has just gotten richer and richer and richer over time. And if we look at like, let's take a look really quick. Remember with me, chat. So May 15th to the 24th was a big accumulation, and like August 30th to September 3rd. So if we look at just price, past year, May 15th, that's not May, this is May. May 15th to the 24th, price was mostly flat. End of August, price did rise. Yeah, I don't think there's a lot of correlation with that whale address and where prices move next. I wish there was. It could have been a really cool discovery here live on stream, but we'll just have to see. I think it's interesting that one address is holding more and more and more. Maybe some slight alarm bells going off with that, but not necessarily bad, just interesting to say the least. So maybe we can do some more investigation on that. I think that's very intriguing. Social dominance has been higher and higher as of late. It's pretty much just hit here in late September and mid-October, its largest social dominance levels since last year, right around Christmas time. Weighted sentiment has been rather high, so the mainstream has been catching on to Balancer as of late with a little bit too much euphoria. It's come back down to earth though, so this is a good sign. Pretty much the lowest it's been other than this anomaly in a couple of months. And as far as development activity, it gets a pretty fair amount of development on a day-to-day basis. Yeah, I like to see that. And that's pretty much it for Balancer, but I think that was a really cool recommendation from the person who requested it. For Cardano, we'll have to do it next time because we've done it like 3 of the past 4 weeks. I thought it would be better to mix it up with the other 2 requests. But regardless, thank you for requesting that. And thank you to everyone in the chat for participating in today's call. I am sure that once markets grow, our channel and viewers on YouTube will grow as well. But in the meantime, feel free to continue to tell friends about this. I think that what we do is pretty unique to crypto, and we really are trying to stay objective in analyzing where prices can move next for you guys. So please spread the word. Don't forget about your referral codes, which you can generate just by going to your avatar up here. And anytime you want to share anything Santiment related, you can just click create referral code. It'll give you a little link and you can share that with any insights you have on Twitter, Discord, wherever else you chat with your community. But that's it for today. And on behalf of Max Balrash here, have a great weekend. And I thank you all for tuning in. Take care.